Well, the market was down yesterday. Some people called it a bloodbath. I wouldn't characterize it quite that way, but Tesla was down too. Now, none of that was very surprising given the Fed move on Wednesday. And today we've got Fed presidents speaking, so that's never good. Anyway, what's going to happen next? This morning, it's been all over the place. Tesla, the last time I looked, was down in an up and down market, kind of flat market. So we're, as far as I can tell, and this is, this is just me making my guesses based on all the available information. I think that we will now start the next leg of the bull. And I think that the next leg of Tesla's move up will also be true, not just because there's a whole bunch of catalysts ahead, but there's also, the overall good news, according to the Fed. Now, some people are saying, look, the Fed's always wrong. That could be true. They have not had a very good track record of being able to predict what's coming next. Tesla does have a couple of rough days. They have October 2nd that could be rough this time. That'd be the day that they report the production numbers and the shipment numbers. And a lot of people might be surprised by how low those are, but we've been reporting on that for a while now. And every evidence would be that they're going to be pretty rough. Now, we also have the third week of October when we'll have the reporting of the actual earnings and then the earnings call. Of course, the earnings call usually is a disaster if Elon speaks. The earnings themselves, maybe a little bit of a surprise on the upside. Not a huge surprise on the upside, but primarily because of margins probably being better and energy being better than expected. We might get a little bit of a surprise there. And I've already reported all this, of course, before. So right now there's some bargain hunting going on, but as I mentioned, Tesla is down more than the market. This is Randy Kirk, in case you've forgotten, or maybe you're new. Brian and I will be doing a couple of episodes later this morning. I think those won't play today. They'll probably play over the weekend because I recorded a show yesterday that I think we'll do later today that's all about the 24 moats that Tesla has that are surrounding the Tesla castle, that are filled with crocodiles and amazing, terrible things that you can't get past. Anyway, then Larry Goldberg and I will be on later today around 4 o'clock, and we'll be talking about all of the good news, because by the time Larry and I report, I think the market will be up and so will Tesla. What do you think? I don't know, going into the weekend. So we'll also, of course, talk about Patreon for a minute, and you'll notice that one of the one of my listeners this morning or yesterday said, "Hey, Randy, why don't you put the bottle and the bottle opener up there on your library shelf?" And so I did. Not very well lit, but at least it's there. All right. The Federal Reserve's expectations that the U.S. economy will continue to expand and necessitate additional interest rate hikes, maybe one later this year, to combat inflation, prompted HSBC to raise its year-end forecast for 10-year U.S. Treasury yields to 3.5%. Remember, we're sitting at 4.5 right now, just under. They raised it to 3.5 from 3%. This was according to strategists at the bank. This is a drop of a full point from here. If they're right, the bond market is going to have a very nice time between now and the end of the year. And this is not investment advice, but if that's your inclination, I've been talking about it for a long time. This is not investment advice, it's just true. Bond values raise as bond yields go down. And a lot of people I feel that we are at the top of the bond rates right now. We could go up a little more, but not much more. And so that means that if the bond yields start to drop, and why would they drop? They would drop because a lot of people decide it's the top, just like any other market. Okay, all markets act the same. So if there becomes bargain shopping with regard to bonds, then bonds could go up. That's just the way it is. And people have been talking about this for a while. It's not an invention of Randy Kirk's. All right. Thailand's new Prime Minister, Strata. Yeah, okay. I should have looked up the pronunciation. Anyway, he's the Prime Minister of Thailand. Said on Thursday he held talks with Tesla chief Elon Musk during a visit to New York. They discussed the electric vehicle industry. My question, how many presidents, premiers, kings, princes has Elon had meetings with this year? Is anyone keeping track? He's missed one of the big ones. That would be Biden. Sales of existing homes in August came in lighter than expected, not lighter than I expected, and are approaching a near 13-year low. Not shocking, according to data released Thursday by a trade group. Still, prices rose, as I said, and mortgage rates could move another leg up to 8%. So I read this whole article, and at the end of the article, I mean, it's pages, paragraphs and paragraphs and paragraphs. There was not one mention of the fact that there's no inventory, that it's the least inventory that's been in the real estate business ever, that it is half of what it was pre-pandemic, which was already historic lows. I mean, 4 or 5 years in a row, historic lows, and then the pandemic, historic lows, more historic lows, and then now half of what the levels were going into the pandemic. So mortgage rates are not the issue. We've had much higher mortgage rates than this, and they could go to 8%. But properties are moving very briskly. When they come on the market, they move. Others recognize, I'm talking about people like you and me that are smart, we recognize if we're in the market for a house, if we need a house, we're going to move into a new area and we need a house, or we need to downsize or upsize, and we're willing to take the hit, there's a lot of ways to skin the cat when it comes to mortgages. You can, get a mortgage at these levels now, and pay later to lower your rate in a refi. You can pay down the rates. People are paying all cash. Maybe you're going to be moving down in size. You sell your house for $1 million maybe you only owe $200,000, you get $800,000 in cash, you go buy something for $600,000. I mean, there's a lot of that going on. I think it's something way over 20% of all the transactions right now are for cash, and a higher number than that are all investors. So, this is an interesting situation that we're in right now. If you are thinking about a mortgage, you need a mortgage, call my friend Bill Rayman, 310-453-4016. He's in the top 1% of all mortgage lenders in the country. He's also my client. He's been my client for 15 years. My friend, he's done multiple mortgages for me, for family members, for my friends and clients. I will put his information down below. And speaking of that, some people have been asking me for the contact information for my CPA. She's also a client. She's a co-author in Making Money Out of Thin Air, but I'll put her information down below. Her name's Shaila Chamberlain. All right. Patreon member Beatles for Sale sent me a chart that shows that the Europeans are continuing to cut back on natural gas use by a lot. All of these commodities like natural gas and oil, etc., are international. So the drop in price or the drop in usage in Europe will affect the total prices that you'll be paying for your heating bill this winter. But it's a good indication that Europe is prepared again to deal with winter. Natural gas is going to be fine. Oil, everybody seems to be putting pressure on. Right now, the Russians have created a blockade, not a blockade. They've stopped all exports of diesel out of Russia, which is putting pressure on prices again this morning. We'll talk about that in a second. As noted over and over again, eventually oil sales will be impacted by the massive amount of natural gas that's on the market right now and the low prices on natural gas, because there are abilities to trade off from oil to natural gas, and those will start to be, people will start doing that. From Business Insider, Campbell Harvey, the Duke University finance professor who coined the inverted yield curve as an indicator of a coming downturn back in 1995, was the first time he started talking about it. He doubled down on the accuracy of his famed recession gauge in an interview with CNBC on Thursday. Now, he uses, instead of the 2-year or the 2-month to make his decisions, he uses the 3-month compared to the 10-year. Everybody uses the 10-year. Then they compare it to the 2-month, the 2-year, and now he does, the 2-month, the 2-year. He says, no, he uses the 3-month. And he says he's been correct 100% of the time on every recession since 1968 with no false recession. In other words, every single time that there's been an inversion, there has been an eventual downturn in the economy. Now, when he says eventual, he says it'll happen within 14 months on average. That he says that's because the yield curve inversion typically lags behind the start of the recession. Average rate of over past four recessions, 13 months. This is only over 4 recessions now, and 13 months. The curve officially inverted on October 26th last year, although the other inversions started way back in July. Fed data shows, meaning that the recession signal is just a few days shy of the 11-month milestone. If history is any guide, that would put the start date of a recession sometime in December or January on average, it doesn't say in this article. And though the yield curve has flattened its inversion over the past 6 months, and now it's back up again, though, that's typical behavior, and such a flattening has preceded the last 4 recessions, he warned. The indicator is 8 out of 8 when predicting recessions, no false signals. So it's way too early to say this is a false signal. Maybe it does turn out to be a false signal, but you can't say it's a false signal before you even hit the average number of months. I'm not saying this is wrong, but it certainly gives a lot of leeway. So I would say that the Elon Musk rule is that after any new product announcement, it will be completed on an average of 3 years after the announcement. And the Randy Kirk rule is that any stock prediction will be true with an average of 2 months after the projected date. So if I get that much leeway, I think I'll have a very much higher record in terms of my predictions. Reuters is reporting this morning that Toyota is going to speed up EV production. They're going to aim for over 600,000 vehicles in 2025, according to the Nikkei. They said that the Japanese automaker is likely to step up production of battery-powered vehicles over the next coming years to reach an annual output of more than 600,000 in 2025. Now, if the company has said that it targets sales of 1.5 million by 2026 and 3.5 million by 2030. So those numbers all make sense to me. 600,000 in 2025. I think they're only doing about 25,000 now, but they could ramp up that quickly. Especially, I think they've got 3 different automobiles in 3 completely different divisions. So 600,000 is not unrealistic by 2025, or at least being at a 600,000 run rate. Hitting 1.5 million in 2026, that's a little harder. 3.5 million by the end of the decade, I think that's a doable. So, but this is the kind of thing we're going to need from all of the companies in order to get ICE completely out of the business by my estimate of end of 2027. Now, end of 2027 under the new rule, the new Randy rule, that gives me, I get 2 years on either side. It's an average. My average estimate is that it'll be 2027, end of 2027. Anyway, but yes, if 21 companies are all making 1 million cars and a couple of them are making 3 and a couple are making, Elon's making 11 and BYD is making 6, we should make it by the end of 2027. All right. No change in truflation today, still sitting at 2.66. Dan Ives posts this morning on X. Our worry around the UAW strike is it's a disaster situation for the Detroit Big Three with the head-scratcher current deal on the table. The deal, in our view, is mathematical gymnastics that negatively changes the business model of GM and Ford. Meanwhile, Tesla has champagne on ice. Okay, lots of Fed speakers today, so a lot of opportunities for volatility. The day traders will be having a field day, in my opinion. Now, maybe not. Maybe it all just flattens out and goes away. But there's already a lot of up and down this morning. The Dow has already been up 20 and down 20, and anyway, a lot of crazy trading going on. Let us take a look and see where things stand as we hit just about 7 o'clock on my time here. California time. All right. So Tesla, which has been down 3, been up 2, is now down 132. It is down where everybody, all the other magnificents, well, Microsoft's down 2 cents. The Dow is now down 36. NASDAQ is up 61. S&P is up 7. In percentages, those would be the Dow is just down, 0.11. NASDAQ is up almost 0.5%. S&P up 0.16. And Tesla down 0.5%. The rest of the magnificents now are all in green, and all the Cathie Woods are down. So this is really weird. Tesla on some days is following the Cathie Woods again, and that used to be true. That Tesla was commonly very similar to the Cathie Woods as they moved up and down. what I call the Kathy Woods would be not only Kathy Woods' actual ETFs, but also some of the companies that she's strong on, like Square and PayPal and TDoc, et cetera. And so I watch all of those, and typically because they are, I call them risky growth stocks, they change based on the interest rates, change a lot based on interest rates. And that's what Tesla was doing for a long time. But now Tesla should not be doing that anymore. It is now not risky at all. It is one of the least risky stocks on the market. So I'm unclear as to why it is moving opposite of the market. Well, but barely. It's very, very early, and it's very small move. But interesting, the UAW should be positive for Tesla. The coming announcement of the various catalysts, all kinds of catalysts, those should be positive. I'm not sure. Now, Kathy Wood has been selling a lot of Tesla stock lately. Maybe she's busy again this morning. Anyway, let's take a look at the rest of the indicators this morning. And what we've got is we've got the Bitcoin up a little tiny bit at 26.6. We have got the dollar at still at very much at the top. Gold is up just a little bit, but sitting down close to the lower end of its recent range. We've got oil up again, back to 91. However, now we're starting to see some range happening here. A little bit of range selling between 88, 89, 92. That's a very small range on the Texas Intermediate. Same thing on the Brent, 90 to 95, 90 to 94 and a half, actually. So this is, all of a sudden, there's a little range settling in here. Maybe, who knows which way it'll break out. I believe it's still going to run to 100. But it's now starting to show a lot of resistance to getting above this current range. Could meet more resistance. All markets, like I said up above, all markets work the same. And right now, that's what we're seeing in oil. Okay, in bonds, they are down 4.458 for the 10-year. So it's bounced up against that 4.5. It was actually above 4.5 a couple of times yesterday, but it's also having a little bit of trouble getting above that number. If we look at the 2-month, it is up a little bit this morning at 5.44. We look at the 3-month now, okay? It's just for fun, almost 5.5, so just a little higher than the 2-month. We've got, so those are going up while the 10-year is going down. And we've got the 2-year, which is still above 5 at 5.1. All right, well, that is where we are this morning. What do I think will happen today? I think I've already said, I think it's gonna be a choppy day. I think there's a lot of up and down. That's what I've seen so far this morning. I think that'll continue to be the case, especially with, I think, 4 Fed speakers coming out this morning. Lots of opportunity for things to be tossed around. Would you like to be a part of the production team of this amazing organization, this YouTube channel? And would you like to get one of these for participating in Patreon with me? All you got to do is join at the $10 level. Thank you so much for so many people joining this month at the $10 level, and a few joining at the $5 level. Now, if you join at the $5 level, you get one of the 2 books above there, and there's 2 other choices as well. You get one of those for free on the audio version. Those are like, $15 to $20 deals. Okay, so you get those for free, or, well, on the $5 level, that's all you get, one of those. At the $10 level, you can have 2 of those, or you could have one of these magnets, these amazing bottle opener magnets. That's why it's leaning up against a bottle, is because it's a bottle opener. Be sure if you order one, tell me whether you want stainless or whether you want the camo. And these are just so much fun, and they're only 25 bucks. Okay, so they're great for gifts, great for just something to put up in a shadow box in your home, put it on your refrigerator. Maybe you're waiting for your camo version of the upcoming CT, but you'd like to have something to remind you of it every day, of how anxious you are sitting there waiting for it to come. Anyway, information down below. You can go to paypal.me/Randy Kirk, all in lowercase letters, and $25 a piece. If you're not in the country, please add another $5 another $20. Real quick now, if you're outside the country, add another $20 to cover the freight, no matter how many you buy. All right. That's all I got. Let me get this posted so you guys can hear it, and we'll talk to you a couple more times today.